Great. Good morning. Thanks everyone for coming. What I'll be telling you about today is really why NorZinc and why NorZinc now. You may have heard of the story before. What the infrastructure you're looking at is 40 years old. The Prairie Creek project was originally built to a 90% completion under the name Cadillac Silver Mines by the Hunt brothers. And between 1980 and 1982, we have a 1,000-ton per day mill that was never energized. All the surface infrastructure that you can see, and also 5 kilometers of underground working. So I like to call this the 40-year startup. I've been involved in over a half a dozen mining startups. I was employee number 5 at Wheaton River, became Gold Corp. A number of spin-offs that we've done, and in the last 5 years, a couple juniors in Toronto. What we have today at Prairie Creek, is really a path to financing and production. I joined 6 months ago. Moved to here, and really, the reasons for getting involved in NorZinc today are the best reasons are the same as it's always been. This is an exceptionally high-grade deposit, 24% zinc equivalent, which is broken down about 10% zinc, 9% lead, and 140 grams per ton silver. At about, at the throughput rate we're looking at right now, 2,400 tons per day, about a 10-year reserve life and another 10 years resource life, and you'll see some of the geologic potential. It's in Northwest Territories in Canada. We just put out a PA a month ago to show what does the mine look like at 2,400 tons per day. There was a FEES that was 4 years old at 1,600 tons. This shows a 300 million US NPV, relative to 40 million Canadian market cap, and some very strong numbers. We've got a strong management team and technical team and board, and a major shareholder in RCF. And we'll show you that we're really ready to finance and build this project. Why now today? A number of our recent achievements. We did put in, the mine has been fully permitted since 2019 for the access road, as well as the 1,600 ton per day operations. We put in an amendment to the 2,400 tons per day with a major milestone in September that we don't need a new environmental assessment. And I'm not going to say it's zero risk, but it's very, very low risk to get from where we're today to the full 2,400 ton per day permit by April of 22. We finalized all agreements with local First Nations, and we have strong support. We've been progressing significantly on the offtake side, which has been some of the concern in the past. We've updated an MOU with Boliden that is roughly for 60% of the zinc offtake, and we're working with a number of other major offtakers, and obviously very strong outlook for the market. We're looking at 3 years to production, and that's my sole mandate. Joining 6 months ago is to get this project financed and built and in production by the end of 24. We've started since the PEA, which really was sort of 1 step backwards to go 2 steps forwards to get numbers out to the public. We've already started on a FEES, which we also expect to complete by early Q2 22, and in conjunction with the final permit, amended permit, and the FEES, be working in conjunction on project finance package that I expect commitments and working towards commitments by the middle of next year, in parallel with the feasibility. Just some comparables on zinc equivalent basis to a number of other peers. It is one of the highest grade. Looking at the Woodmac cost curve on a byproduct basis at 19 cents per zinc pound in the bottom third of all projects, on a co-product basis in the bottom 50 or 60%. Just some of the results from the PEA that we announced October 21st, and we filed on November 10th. So it is on CDAR. Again, about 20-year mine life, 123 million average EBITDA. After-tax free cash flow before any financing, depending on the year, in the range of 60 to 100 million US per year. And initial capital at 368 million. These are all US. Certainly is up from the original fees at about 300 million Canadian 4 years ago, and the road is a significant component, which we'll touch on. Just from an ESG perspective, we have a very small footprint, which you can see down below. There's our total site. What was originally going to be a tailings pond, that's just rainwater there now. We'll repurpose, divide in half, and we're going to make it a 2-cell water treatment facility, one half for just natural runoff water, and the other half for plant water with 100% water recycling from the plant, as well as no tailings. We're building a paste and backfill facility, and it'll be 100% paste backfill underground. We have strong relations with the local First Nations, as mentioned, and finalized final agreements in August. Just a little bit on the resource. The red is your measured, green indicated, and blue is inferred. It is steeply dipping to the north. This is it dips from south to north. And the total strike length, that's measured in the resource today, as you can see, is just over 2 kilometers. Given that it dips at the same time that the topography goes up, there hasn't been, drilling, only, single drilling campaign. You can see about 2 kilometers north, still showing very strong results, and importantly, the very same mineralogy. And we expect, that it's an extremely consistent and homogeneous ore body. In addition to the high grade, it's about average 4 to 5 meter width in what is the main quartz vein, which is 60 to 70% of the ore body, and we expect that to continue. And can wave one's arms and see a strong exploration potential. Here's just this is a real plant. That's a picture I took in August. It's never been energized. We will replace a lot of that equipment with some more modern, but it is in great shape. The concrete's in great shape. The steel's in great shape, even though it's been sitting there for 40 years. Partly because it's very cold, and it's actually quite dry in that part of the country. The paste fill plant is what's on the left in the drawing in bright blue. Really the key to unlocking the value of the project is an all-season road, 170 kilometers. It's likely one of the challenges of why the project hasn't been put into production earlier. It'll take a 3-winter, 2-summer campaign to build an all-season road, and we'll start this winter with what we call the initial phase 1 winter road, primarily aimed at clearing the whole 170 kilometers and then doing geotech work that's needed in order to do the final analysis and design of the all-season road, and then go into a full winter road next year, which will be when we bring in 700 to 800 loads of equipment to start working on, on the mine and the surface. And that's how all the equipment was brought in the first place, in 2 winter campaigns in 1981 and 82. There's just a graph of our project plan timeline, and you can really see the road is the key to driving it to a 3-year production or construction timeline. If it weren't for the geography and seasonal constraints, you can see the mine and the mill really could be up and running in, say, about a year and a half. And we'll be again coming to an updated fees and permits in early Q2, and expecting financing commitments by the end of Q2. So really, there's a number of catalysts in place. We have a strong shareholder support in RCF, and we're very confident in our plans to bring this into production in 3 years. Thank you very much.